Good morning. Thank you everyone for joining us. It's very rousing to see such a big, nice, engaging audience. So today we have a very, very diverse and experienced panel. And I would like to let each of the panelists introduce themselves. And this panel has been put together so that you get a broad range of viewpoints and insights from government-related investment entities right through to family offices and exchanges. So perhaps, and also venture building partners. So perhaps we could start from my right. So Xian Hui.
Yeah, thanks a lot. Really excited to be here. My name is Xian Hui. I'm head of investments for SGInnovate. We're a Singapore government-linked fund set up about 8 years ago, primarily to look into what we would term as emerging technologies, but more specifically, emerging technologies with the relevance to the Singapore economy. So we would try to be the forward-looking or the canary in the coal mine when it comes to technology, making small early-stage bets in technologies such as nuclear fusion, hydrogen, participating in the mobility transition, technologies such as this. We tend to be a bit smaller, of course, than the sovereign wealth funds, Temasek GIC, that have a much bigger charter and responsibilities for for preserving the wealth of Singapore. We can afford to be a little bit more risky with the kind of bets that we place. Areas of focus for us, obviously biotech, but more specifically cell and gene therapy, sustainability, but perhaps a little bit more on the energy side of the equation to enable energy self-sufficiency for Singapore. So nuclear fusion, hydrogen, the grid, decarbonization, agri-tech, in the areas of cultured meats, bioreactors, fermentation, and finally, advanced manufacturing, where we sort of cluster everything else, space technology, quantum, semiconductors, so on and so forth. Thanks.
Thank you. And then next we have Wee Ming.
Yes, very good morning to all of you. It's always very good to be back here. I think Wholesale Investor has been putting in place a lot of very diversified ventures, and I think we are very happy to hear that it's always running on an annual basis. And Singapore has always been a hub for investments, for finance. For us, we are one of the early family offices that is established in Singapore. You guys know recent influx of all this money coming into Singapore, setting up family offices. We are not strange to this. We've been doing this for more than 15 years. Venture businesses for us is always a constant upgrading because, as families putting their own pocket money to invest, they always look at what is the growth. But along the past 15 years, our exposure has told us that if you are not accessing to technology, if you are not looking into disruptive element, one of these days your asset will be displaced. And the fact here is that you can see that a lot of family offices, the young generation, are really trying to understand, learn how technology impacts their own business, how technology could be one of their growing pattern in formulating their investment strategy. And this is, I think, my opinion that this is where we should also learn from you guys in the venture business. Whether you're a startup founder or you're a venture capitalist, it's an ecosystem. And this ecosystem itself needs to have this collaboration among all the stakeholders. So we are one of the stakeholders. For us, simply speaking, we do not invest everything because we want to make sure that we are familiar in the space that we operate in. However, there are a lot of fund managers in the world that we invested in, from the US to Europe, of course here in Asia. And I'm very sure that some of you guys in the VC, or even, you've got the experience in the venture builder business, we are here to work together so that we can scout founders that will be able to make a difference, not just in the industry, but we're talking about society now. We're talking about impact investing. And we like to be one of the forefront risk taker to work along this field. At the end of the day, for us, we do not believe in just returns. We believe in the balance. And this is where I think we are always looking ahead that, okay, if you've got the very exciting business proposition, you've got the disruptive technology, my third question to you is that how does this impact all of us, right? So I think these are some of the very practical way where there's a constant trend changing how investors look at technology, how investors look at technopreneur, and how investors will also look at picking the right technology to transform, if not to also revolutionize their business. Thank you.
Thank you very much for the very, very detailed and insightful briefing. And so next we have early stage VC, Jeff from iGlobe Partners.
Yeah, thank you, Jacqueline. A very good morning to all of you, and thanks to Steve and Tim for having me here today. My name is Jeff. I'm with iGlobe Partners. It's a Singapore-based cross-border early-stage technology venture fund headquartered in Singapore, but we primarily invest in both Southeast Asia, US, and UK. Firm has been in the market for close to 24 years already. We have been delivering a lot of good returns for our LPs over the years. Our firm actually been in the market for more than 20 years. Actually, it says something by itself, right? Been able to consistent fundraise one by one. Our founding partner, Subun, was actually the one who back in 1988, together with Filipio, actually, they started Vertex, which is part of the Singapore government's technology investment arm actually at the time in Silicon Valley. So because of that heritage, we kind of over the years have been focusing on helping a lot of Western startups scale the business to Asia Pacific, but also helping some Singapore startups actually scale to other countries like Japan, for example, in other part of this region. In terms of technology sector focus we have been over the years actually investing actually primarily in more B2B kind of deep tech kind of domain. You can see that when I joined the firm actually more than 10 years ago, we started going into a field called synthetic biology. There's one actually the so-called sector actually today we kind of focus on a bit. And we also have a lot of focus on enterprise tech when it comes to AI, big data, data platforms, cloud services, software as a service. Actually, this is another sector actually we spend a lot of time in. And you probably heard about companies like Unity Software, right? So this is actually one of the winner actually in the category of so-called the games platform and also in the AR, VR kind of domain. So we were the Series B kind of co-investor back in the firm actually back in 2011. As for myself, I joined the firm like close to 10 years ago. And over the years, actually, I really grew along with the firm. Today, we have a much bigger firm, a much bigger team and then when I joined actually 10 years ago. And I also have a couple of colleagues in the audience today. You can just go and talk to them during a tea break. Very nice to be here. And thanks, everyone. Thanks.
Thank you. Thank you, Jeff. And now this is very exciting. We work quite a lot with Antler, and Antler in terms of, it takes a village to build startups and get funding. I'm very happy to introduce you, Rufus.
Thank you, Jacqueline, for that very kind introduction, and thank you, Wholesale Investor, for having me here today and putting together such a great panel. My name is Rufus, and I'm an associate partner with Antler. Antler is a early stage venture capital fund, predominantly investing in founders. So what we do is that we like to work with founders from the early days when they're ideating, when they're forming their teams, and support them with investments all the way until a Series C. We're a Singapore-based or Singapore headquartered fund, but we've always been a strong believer in network effects. So that's why we've, over the last 5 years since launching, expanded into over 25 locations all across the globe. We have 17 active early stage funds via we deploy capital and roughly around a team of 300 employees globally. I think according to PitchBook, we were also the most active early stage investor globally in Q2 of 2023. Obviously something that we're very proud of. And we hope to invest into more companies all around the world. A bit here in Southeast Asia, we're completely industry agnostic with on-the-ground operations here in Singapore, Jakarta, in Vietnam, and also we're launching Malaysia now in the coming month in October. Obviously, if you're a founder or you're an investor yourself, feel free to reach out to me and come to talk to me if there's a way that we can collaborate. We're a strong believer in collaboration, and hope to have a chat soon.
Thank you, Rufus. Just briefly to introduce myself. So thank you, Wholesale Investors, for inviting me again this year. And very good work by, all the team. So I'm Jacqueline. I currently with AB Capital Markets. We are the capital markets business of Australian Bond Exchange. We are HQ'd in Singapore. We have a very, very powerful capital markets business that is currently working financial institution to financial institution. Our team can't be here this morning. We're busy trading, and I'm sure Nick is online listening to all the panelists. So as part of, the conviction to Asia and being an exchange, as part of offering investors a diverse range of opportunities, a portfolio range of investment opportunities and instruments, the AB Capital Markets and Australian Bond Exchange were expanding into asset management and still HQ'd in Singapore. And this will then enable us to bring to the investor community and also to the venture founder community and businesses here, the opportunity to either participate on the issue side or as investors to participate investing in a broad range. So we work on fixed income instruments, which means that investors will get a fixed regular return on their investments. The underlying substance of the fixed income instrument could be equities, could be debt, could be anything that we can monetize and securitize. So very interesting to be based in Singapore currently with the likes of SGInnovate and venture builders and investors like Antler and family offices. And it's such a rich ecosystem, and it keeps growing. The report is there are over 500 VC firms now. Private markets AUM has doubled in Singapore. The money is flowing in. Judging on Slingshot each year in the segment of green energies, technology and environment, we see cutting across all the segments, areas of industry is agri-tech, food tech, climate tech, biotech, and energy-related companies moving into the sustainability, the realm. And so it is a very exciting time now. Come speak with us, financial institutions out there, institutional investors out there, come speak with us. And also, family offices, come speak with us. We're growing into this broad range. Without sort of further ado, I wanted to kind of introduce a topic and get the views of the different perspectives from each of the panelists. So firstly, with Sen Hui, some of the areas you mentioned are very deep tech areas and getting investors involved and understanding the risk element and the risk characteristics versus the rewards down the line. For example, biotech, very closely linked to healthcare, and then marrying that together with the medtech type thematics. How have you sort of seen that change and that growth? And how has SGInnovate supported both the founder side and encouraged the investor community to come on board earlier?
How much time do you have? No, I think it's a good question. It's a very broad one. In terms of the biotech or the medtech sector, it has traditionally been one where a lot of the more traditional VCs have shied away from it. And to a certain extent, rightly so. I mean, it is long gestation periods. The outcomes are binary. We just had that conversation with someone outside. Outcomes can tend to be binary, especially when it comes to drugs. I think for medical devices, there's an iterative process that allows you to perhaps go back in. But ultimately, the drugs have to work. But I think, with COVID, with the opening up of the mRNA platforms, a lot of people are starting to realize that, more investments need to go into this sector. Some of the big drug screening organizations, the FDA, for example, are also looking at different ways in which they can fast-track certain drugs that they believe are likely to make a real impact on society. So I think there's a changing of mindset, especially after the COVID lockdown, when everyone realized, hey, this is not the traditional ways of doing things probably will not work. Now, as an investor, I got to admit, I'm not from that sector. And when we were tasked to look into investing in that space, what we did is we did a very thorough assessment of what are the different milestones an investor would need to assess, from a funding, from a valuation, from a risk perspective. And ironically, we actually found that the biotech, medtech sector has the most clearly defined pathway to market. To a certain extent, you can almost plan it, based on the stage at which the asset or the research is at, and you can almost track its path all the way to market, and then assessing its market opportunity is also easier because reimbursement codes in the US have got a fixed figure attached to it, and you can sort of get an assessment of how big the market is likely to be, and you just work backwards from there to get a valuation. The big problem, of course, is at the very early stage, every scientist believes that his product is going to be $1 billion, so his company is worth $100 million, even though it's still at the in vitro or in vitro stages. And that's always sometimes the problem that as investors we face. We've got to bring them back down to earth and say, hey, you are here, your product is going to be $100 million of investment just to get you here, so don't ask me for a valuation that's going to kill me by the time I get to the top. So I think these are some of the things that I think investors are starting to educate themselves on, because they want to participate as well in this huge opportunity. From a SGInnovate perspective, and we are global investors, so we invest in other parts of the world, because it would be very insular for a government to set up a fund and say you do emerging tech, but you can only invest domestically. I don't think the Singapore government is that has those blinders on. They believe that the best tech probably comes from other parts of the world as well. But of course, domestically, we try to help our researchers make that transition to commercialization by having programs in place where, government grants are there to subsidize the de-risking of the science. In other words, if you have done some in silico modeling, for instance, of a particular protein, some of these government grants can be used to de-risk it to the extent where you can actually get some in vivo studies done and some clinical data that can actually contribute towards the commercialization. So I think those are the things that we have in place, and then of course programs where we would co-invest alongside these government grants so that there's always that commercial tracking of the science. Because sometimes the scientist starts here, the market is here. 5 years later, the scientist is here, the market is here. So we always try to bring the two together and try to not let the scientists run off and go back to the jungle where they came from. Okay.
Thank you
It's
very
always
much.
the case.
Thank you very much, Wee Ming. Yes, it's. I used to be an investment manager for a biotech fund, so yes, the indications approval are very specific, and the risk therein lies the risk. I want to continue on the thematic of impact investing, and we're very fortunate to have a family office fund on our panel. So, we'd like to inquire. Can you share with us insights into this segment, and you talked about this before, that you're very big on impact sector, investing in impact. What are the different areas you've seen that's come into that fold? So you mentioned energy transformation is coming to play, and that falls into the ESG space. I ask this because I'm so happy to see that this has taken a lot of traction. I remember doing ESG projects with the United Nations back 15 years ago, and it was so difficult to attract capital, attract interest. And then with COVID having occurred as well, and the renewed cognizant, recognition that health is also an impact area, and food security, the supply chain of food and health and energy are all intertwined. Could you share some of how a family office now views investing in those areas, and how you also co-invest, or do you co-invest?
Well, I should say that this is a very primitive stage for most family offices, especially in Asia, because a lot of the money, given that old money has been make the wealth coming from very traditional industry, and property, real estate is always the darling of most of this wealth. But I'm very fortunate to be in a family office that the culture is different. So I've been exposed in Europe. I've lived in Switzerland for a few years and just got back. When you are exposed to a different environment, you are in a way being influenced into that environment. And being Asian, we are very, very commercial-centric, forward-looking, very dynamic. But in certain other places, especially in Europe, people are a lot very passionate in environment. And when you talk about passionate, they've got a theory to show you how passionate they are, aside of the commercial numbers. So those are the things that in the family office, I think, again, if I'm sitting now in the family office conference, I would encourage my fellow friends to say that, hey, you got to really go into other environment, maybe through your network, to go and learn some of those. It's a cultural stuff, because there's many form of investments that we are always exposed to. So impact investing is a very tricky thing. While I was in Switzerland, I'm chanced to work with UN, the UN guys. So, the UN SDG, they've got various pillars for you the guidelines are there for you to get educated in a way and oriented. And then working with European fund managers, then you know that, okay, some of those things, even though today there are not many standardization still, but of course, there are other means to quantify the returns. So in Singapore, I know that, we are putting a lot of effort, or in Asia, we are trying to put a lot of efforts, trying to educate investors, not just in family office, what is really we call impact investing. My personal opinion is that I would suggest, since this is a more founder-centric audience, I suppose, please, don't use climate as just a topic. Don't use sustainability as a topic. You've got to really ask yourself, that how are you going to make a difference? It's not about the technology. It's about how are you going to orchestrate the business logic that you've got access to a particular technology that you can create a differentiating factor. Need not to be a direct impact, but also it can somehow be a relation into an impact project. So I'm always intrigued by project that is not happening in, city-state like Singapore. I'm intrigued by projects that is going into Cambodia. My guys in Geneva is doing a project now in Cambodia, doing, an impact project where coming from a Westerner, you already put yourself in a Asian context, in the village, trying to quantify an impact project. So this one give me the sparkle that, hey, the founder themselves, they've got this passion because they are sacrificing, right? So in this kind of venture, it attracts people because you can see that the heart is there to create an impact, not just to use the language of impact, creating a commercial plan around and trying to fundraise. Today, a lot of investors are super connected to many kinds of projects. So please go down, really get down to where you want to do as an entrepreneur, how you can create an impact, and what are the resources you think that you can develop and you can bring together into an ecosystem for investors to put that dollar, to believe in you, to give you that runway, as well to constantly help you to fundraise in your future rounds, right? So I think that will be a sustainable model for you to really take part in impact investing, in my opinion. Thanks.
Thank you, Wee Ming. Yes. So focus on what solution you're bringing to the table and how you commercialize that solution so that the business becomes a going concern and is sustainable. And the beauty about impact businesses are you've got a triple bottom line. It's not just money. It's the other soft aspects as well. Quantify those. And that's where very good to hear impact investors are looking at that. So it will be remiss of me not to then touch on technology. So Wee Ming talked about technology as the tool, right, to bringing the solution. So I want to then segue to, Antler and Rufus, where you bring together founders. You have a very rigorous approach in identifying high conviction founders and supporting early stage their growth. So both hands-on as well as an investor, if I'm not mistaken. And then we'll also touch on that with Jeff after Rufus.
Yeah, technology obviously plays a very important part in everyone's lives today. And as an investor and as a tech investor, it's critical to what we do, right? To your earlier point, what we try to identify in founders are individuals or teams with kind of unique insights and clear spikes. This might be, domain knowledge in a certain industry or be an expert in a certain technology, having worked with that or being a researcher, etc. It plays an important part in our investment decision. So for us, it's important to couple the technology with the commercial acumen to create a for-profit business that obviously has, the potential to return venture, right? Meaning that it can scale 100, 1,000x over the next, let's say 5 to 10 years after we invest. Also to the earlier point just about impact and ESG, I think it's super important that, companies and founders, consider this when they're launching their own businesses. Nowadays, it's not so secluded that you need to be an impact company per se, but almost every single company here in the room or around the globe can have a positive impact with what they do, right? And we as a firm take this very seriously as well. We have a head of ESG and impact, Rosalind Basani, who's based here out of Singapore. And we also take all of our portfolio companies through impact and ESG training together with, a hard commitment to have this positive effect. Of course, it's very exciting to see the tech advancements that have been happening over the last couple of years, especially now in the post-COVID world, with a lot of analog bits, like industries still digitizing themselves, together with, very cool advancements in AI and so forth. That brings a whole nother opportunity as an investor and as a founder. I think that's really what we're going to be focusing on moving forward over the next year or so.
Very interesting. Jeff, would you like to weigh in?
Yeah, I echo Rufus. Actually, I think there's the two elements. I think founders and tech are two of the most important drivers to drive this ESG forward, right? As we know, actually, even though we don't define ourselves as impact-only fund, but in many of our portfolio companies, you can see this so-called impact, right? One example is actually this Berkeley spin-off called Hue, H-U-E, actually, they're a color company, right? They use E. coli and engineer kind of E. coli to ferment and then produce the indigo, which can be used actually to dye your denim, right? So you may know actually a lot of indigos actually you're using actually for the gaps or other kind of mainstream jeans they're wearing today actually come from Inner Mongolia. Actually, they're produced in very, very toxic and environment polluting way. And so this team actually in Berkeley, they came out to build this. It's never easy because the commodity price for indigo in the market is so low. So on the high side, we'll say probably this is not the kind of sweet spot that you choose, but the founders very persistent. And in this case, right, because investors and founders, we are so determined to push these things forward, we'll be able to actually bring in leading ESG investors like Material Impact Fund, HSBC to come in to support them and bring them to the production scale, right? And I would say, I agree with being that material, so-called impact is not necessarily just to do with climate. You have opportunities to make an impact in many, many different kind of industries and verticals. I give another example. You may know actually there's two companies, Databricks and Snowflake are now tremendously successful, right? So they're the one who identified the chain actually to make data platform usage more efficient by encouraging more and more Fortune 500, 1,000 companies to move towards the public cloud, use data platforms, and use elastic computing to address the needs of all these kind of companies to kind of combine together. And they create value for shareholders. They create value to the environment by reducing carbon footprint. Because in the past, actually, a lot of companies really run the data platform on their own cloud. And this is actually the kind of thing you can do, actually. The other example I can give you is actually, you may know that the failure rate for the biggest pharmaceutical companies in the world actually in the drug pipeline, the drug discovery process actually is very, very high. Companies squander billions of dollars on certain pipelines which doesn't get the drug eventually approved by FDA. And you have a way to use AI or even with large language models and so on actually to help to screen and narrow down to certain targets actually we have much higher chance of success. You're going to be actually saving a lot of resources for the world. And the other thing actually I want to share, actually also want to add on to what Xianhui shared with you earlier. I mean, like, pharmaceutical actually is a very difficult kind of sector. I mean, like, the failure rate can be high, it's 0 or 1, right? And the other trend I can see in the US nowadays is actually, and there's certain ways actually leading investors, Arch Ventures, they kind of put together and to identify those platforms which can give you chances to generate a lot more useful pipeline in the early stage. And then straight away at the Series C or Series A stage, you're already pumping hundreds of millions of dollars to make sure they have the best resource, the best combination of IP to get it right. And all these kind of things will make the VC investment a lot more sustainable by itself. Yeah, that's what I want to share. Thanks.
Thank you very much. So with the time we have left, I just want to have a quick run through for one more aspect that's taken a lot of limelight in the investment world, in the asset world recently. So it's digital assets. I just would like to get everyone's quick 1-line, 2-line view on what your view is investing in this digital asset space. I'll start off by saying that, from a exchange and from an asset manager and from a capital markets point of view, it has been and is going to be very interesting in Singapore. There is a lot of VCC that's understood now globally, the Singapore Variable Capital Company framework. And now with Project Guardian, which is MAS's project with financial institutions on digital asset and tokenization, MAS has extended that into the VCC world, which is the fund world. So there is now a project on relating to EVCC, that's a tokenization, digitization of VCC, and we'll be getting involved in that. So I'm very interested to hear whether the investor's perspective on this panel of the digital asset space.
So I get to go first.
Thank you.
No, thank you very much. Well, I think digital assets are the future if they aren't already current. From our perspective, we believe that this is a long-term game, and whenever we see these long-term plays, we try to invest in not just the picks and shovels, but infrastructure as well. So if we believe digital assets are going to be replacing certain things within the more the non-digital world, then we have got to look into services that can support that, custodial services, exchanges, services to verify AML, KYC, that kind of thing. So I think lots of opportunities there. AI itself, or generative AI, or these large language models are throwing a little bit of a spanner in the works because they can totally distort some of the information that flows into the validation of some of these digital assets, and we have got to be wary about it. So that opened up a whole new area of investment opportunity for us as well.
That's right. Data sets are very, very important in terms of skewing the AI models. Yes, and Wee Ming?
Well, I always try to avoid this topic nowadays.
I'm so sorry. We can pass on, but would love
It's so heartbreaking. Well, I mean, I'm not sure whether how many of you in the digital asset on this floor, but I would say is that it's really in a very bad. It's in not a very positive landscape, in my opinion. Singapore is doing a good job. I think they're putting together all the right stuff to spearhead this, and I think this is a Singapore opportunity in the world. Do you need some water? You see,
yeah.
Somebody is getting choked.
Sorry, no, because I was, yeah, I know.
And I personally, I'm not very accessible to the Singapore project yet, but in Switzerland, I'm part of the Crypto Association. So Zug, where I live very near to, bunch of friends recently has not been very optimistic. I actually invested in a Swiss crypto bank. That is a very early stage. I got burned as well. So, and when I was back, I got in touch with some people that they are in the tier 1 exchanges, and they are all foreigners. I just find that people have exited their own personal share, and now they are branching into something else. This is not very healthy, in my opinion, because seems to be the incumbent. A lot of the incumbent had exited from their original position, and now they are doing something else. So I would say that if today you are in this sector, you have to really go back to the regulatory model. I think the only way to put this sector back on track is regulation. The risk in this sector is enormous. I think we've got experts giving us paper, and yet everybody of us, we are all being burned. So this has been a heartbreaking sector for me. But I hope that with Singapore, trying to drive this whole concerted effort, institution coming in, retail comes in, I hope we can see a light in the tunnel, and that can actually become a good case study to the world. But there has to be a lot of investors that has to be willing, LP coming in back into this sector. Otherwise, like every day, my email boxes, too many of these VCs are all, all over the world, calling private investors to continue to fund them. But it's going to be a very tough for now, right? So that's my take.
No, thank you very, very much. Very happy to hear that. It resonates with what I was actually speaking about back in 2019, that regulation needs to be at the forefront of this space, giving it the security to investors, that certificate of trust from being accountable in this space. And very quickly to Jeff and Rufus.
Yeah, so first of all, right, iGlobe Partners doesn't have a mandate to invest in crypto asset or any kind of other digital assets, but I would say we are a fintech investor, right? One of the three focus for ourselves, apart from enterprise tech and simple healthcare, is actually fintech, right? So we invest in digital bank in the Philippines, and myself actually have been in the payment and consumer lending space for a long time. I was involved in buy now pay later kind of stuff, right? So as a fintech investor, we have to stay open-minded and respectfully watching this sector, because a lot of people do believe that eventually some form of digital asset is actually going to be there. It's here to stay for sure, right? What I can say is probably we will pay attention to any of enterprise tech which can be enabler or can be a service provider to players in this ecosystem to allow you to do better KYC, to be able to do better tracing. I'll give one example. We have a company in Taiwan, which is actually in the field of time series database. They're one of the three top time series database company of the world. The other two is Influx, DB, and also Timescale. So this one is called Big Object. And recently, actually, they moved the global headquarters here to Singapore. And the reason why here is because they won a very huge contract from downstream partner in China, right? So this database actually is very efficient for them to handle a huge amount of IoT and transaction data. All these are time series data. And so companies like this will benefit from the new generations of in-memory and data computing, right? So I'm sure that, there's a lot of innovations actually needed in order to improve, like what we mean say, actually, how do you protect, how to enable law enforcement to trace data about transactions and these kind of things. You need underlying technologies. Yeah, that's what I can say. Over to you, Rufus.
I think really, really kind of great points across the board. So Antler is an industry agnostic investor. So we do have, a number of Web3 and digital asset companies all around the world. Of course, kind of in 2023, the market for this space has cooled down quite a lot compared to 2020 or 2021. But nevertheless, I think it's kind of a interesting category with a long-term future for sure. One mistake that I've seen a lot of founders and companies make is, first of all, they're trying to force, this technology into a use case or a business that doesn't necessarily need it today. So meaning there's not a natural fit or need for it, right? So the kind of value proposition that they're trying to bring to market doesn't necessarily resonate because there's so many Web 2 type of alternative solutions or competition there that, are fighting for the same customer base. Then, a lot of these digital asset companies have also been very speculative. Of course, when a new technology comes up, everyone wants to capitalize on that, which is natural. But for me, it needs to have a clear use case, right? And clear value that it provides to, its users or customers for that matter. And, it's important that the right infrastructure is in place. So I think a lot of the consumer-facing applications have kind of disappeared. And a lot of founders that I'm talking with today, they're really focusing on the infrastructure, right? What can we do to support this for the next 10 to 20 years? Yes. And regulation plays an important part. Just yesterday, I was talking with a founder who's based currently in South America. And they want to come to Singapore and build here a Web3 company because Singapore is one of the leading places when it comes to Web3 regulation and support. So it's also very important that, or the part that government plays here and just kind of the framework which these companies can operate within so that there's clarity and so that investors and consumers don't necessarily get, get stuck with the bag, so to speak.
Thank you very much, Rufus. That was very structured in your answer. And I hope you've been able to get a flavor of the various different segments that have been quite interesting in the investment space, both on the founder side, the venture building side, as well as from the investor side. Please put your hands together and help me thank the wonderful panelists.
Thank you to all our panelists. I hope everyone gained some valuable insights from our panelists in the Venture Investment Trends panel.